FHA financing secrets you did not know about. In this video, you will learn about FHA financing, what it takes to qualify, things that you may have not known about FHA financing, and the best way to get approved using FHA financing. Hi, I'm Kevin Jefferson, People's Lender. FHA is Federal Housing Administration. FHA is a division of HUD. Well, people get an opportunity to purchase a home. One huge misconception with FHA, it is not for first-time home buyers. A lot of people think FHA stands for first-time home buyers. I'm not sure what, the A stands for. But FHA is one of the programs that allows for someone with credit dings, lower income, to get into a home with a minimal down payment of 3.5%. One of the benefits of FHA is that it typically partners with more down payment assistance programs than any other program. So FHA, they typically have approved down payment assistance programs through typically your national down payment assistance programs, your local city government community down payment assistance programs. There are more down payment assistance programs that partner with FHA than with any other loan, whether it be conventional, USDA, VA, or any other type of loan. So FHA loans allow for you to purchase a home with a credit score of, a minimum credit score of 500. Now, if you're purchasing a home with a 500 credit score, you need to have at least a 10% down payment. Because you have a 10% down payment doesn't necessarily mean you automatically qualify for a FHA loan with a 500 credit score. Example, anywhere from 579 down to 500 to qualify with FHA financing, you need to have a 10% down payment. To get a 3.5% down payment, which is the minimum required down payment, you need to have a 580 credit score or better. Now, a lot of people are out here promoting 580 credit scores, get into a home. A couple of things about the 580 credit score with FHA, especially if you don't have any reserves or money left over. You're typically going to pay more for your interest rate. You're not going to have the ability to utilize most of your debt to income ratio because it's probably going to be capped. It's going to be capped because they say, hey, yes, our minimum credit score to get a 3.5% down payment is 580. However, there's more requirements that we need to have. Your debt to income ratio typically is going to be capped at a certain point. That's going to vary from borrower to borrower, right? It's going to vary because you have someone that's a 580 credit score who has no lates, and you got someone with a 580 credit score who has a ton of lates. Then you also have the person who has a 580 credit score who has lates and has reserves. What are reserves? Reserves are the equivalent, 1 month reserve is equivalent to the principal, interest, taxes, and insurance of your mortgage payment. If your mortgage payment is $1,500 a month and you're required to have 2 months of reserves, you need to have an equivalent of $3,000 available after your down payment and closing costs have been paid. Now that can come in the form of being in a checking or savings account. It can be in an account that you can liquidate funds, IRA, 401k, insurance, stocks, like combination of all 4 or 5, but you have to show some sort of reserves. 580 credit score is not a strong credit score. However, I've gotten people approved with 580 credit scores that have had reserves in their account, or they have money in their bank account, or they have a low debt to income ratio with what they're looking to purchase, and that allows for them that takes away some of the risk. Also, typically when you have a 580 credit score, you're going to need to bring your own down payment. There are very few down payment assistance programs, if any, that allow for you to purchase a home with a 580 credit score. And if they do allow for you to do it, your interest rate is going to be higher than market. So I want to make sure you understand that even though 580 with FHA allows for you to qualify for the loan, just understand you're not going to maximize your loan amount. Now, I will say this, and this may not make sense when I tell you, I've had people qualify with a higher debt to income ratio who had less than a 580 credit score, but they had 10% to put down. The reason why they qualify for more is because they had 10% to put down, so they put more money into the deal to qualify. At the end of the day, when you're looking to get a loan and you have a marginal credit score, typically money solves the problem, your own money. Having the ability to have assets, money saved, reserves, all of that plays a part into getting pre-approved and qualified. I would also venture to say, if you have past dings on your credit and you're like, hey, I want to pay this off and pay that off, I would venture to say, if I have the minimum credit score of a 580 when the lender pulls it, and I have reserves, and he or she tells me, hey, you're good, you don't need to pay anything off, I would venture not to pay anything off to increase my credit score unless it's a significant jump in credit score, and I would keep that money as reserves or to show that I have a down payment and my own closing costs and money left over afterwards. There's so many different things that could get you approved using a loan that people typically don't understand and we don't talk about. There's 21 factors that go into someone getting approved. There's not just the credit score. I've had people who've had 700 credit scores but only made $2,000 a month. They don't qualify for much of a mortgage. They have a great score. They have very low debt to income, right? Because they don't make a lot of money, but they also don't qualify for much because on a $200,000 home, using 56% of that income, they're probably going to qualify for somewhere around $1,100 to $1,200 mortgage. That's if they don't have any debt at all. So, while building your credit and your credit score is key to, getting approved and having the right profile, it's not always the end all be all. But I'm not saying the goal is to have a 580 credit score either, right? But I've had people in a situation where they needed to move and their score was a 587 and they had money, like again, I said they had money saved, they had money in their 401k, they kept that debt to income ratio low, and they were able to purchase because things just worked out in their favor because they hit all of those metrics. If you have a low income and high debt, and you have high debt to income ratio and a low credit score, as well as minimal money, you're probably not going to get approved for as much as you need to or approved at all. So in that conversation we're going to have, it's going to be, hey, this is what your score is. We can utilize some of these funds to increase your score, and I'm always going to look at that. To me, does it make more sense to pay extra for the rate because you have to, or are you going to pay down some of your debt so you can increase your credit score? Or are you going to hold on to those funds to make sure that you can get qualified for a mortgage? Those are all the things that I look at when I'm looking into a loan. Also with FHA, the seller has the ability to pay up to 6% of the closing costs. Now, if you are purchasing a home and you're looking at a $300,000 home, the seller has the ability to pay up to $18,000, which is 6% in closing cost assistance. This is my disclaimer. The numbers I'm using in this are not always typical, so just make sure you have advice, which is when you're negotiating a contract with your agent, and just see what the seller is willing to contribute. With that being said, you also have to make sure that you are able to purchase a home through FHA. I'll actually get into that, right? So FHA, minimum credit score, 580. The seller has the ability to pay up to 6% in closing cost assistance. Your minimum down payment is 3.5%. And you also have more opportunity to qualify with a down payment assistance program that can take care of your down payment and have the seller contribute to some of your closing costs. The less money you have into the deal from your physical pocket, the more risk it is for your loan because you don't have anything or much invested into it. Sometimes you can have the credit score, and if you don't have any money and you don't have money into the deal, it's going to be tough to get you pre-approved or approved for that mortgage. So understand, when you hear people talk about, oh, I got into a house with no money down, that could be true. And I've seen it happen many a times over the course of my career. However, you need to also make sure that you listen to your lender and continue to save money. Even if you're in the deal and you got down payment assistance and the seller's paying all your closing costs and you think you walking into closing with nothing, that could be true. Continue to save money, because if something happens during the appraisal and the house does not appraise for what it needs to, first thing they're going to do is, hey, my house did not appraise for $300,000, it appraised for $295,000, and I was going to give you $12,000 in closing cost assistance. We're going to have to knock that back $5,000. So now you're buying a house for $295,000, which changes $5,000. The closing costs going down is not as significant as you would think, because a lot of those costs are fixed costs. Because it's no longer $300,000 doesn't mean your homeowner's insurance goes down. Your property taxes don't go down. The attorney's fees don't go down. All of these things are fixed costs once you're into it. Yes, you're buying it for less money. Your closing costs are not going to go down $5,000 because the price of the house went down $5,000. But the seller's probably going to want that $5,000 back. So now you have $295,000 with $7,000 in closing cost assistance, and you need to bring $5,000 of your own to the game. Also, FHA financing will allow for you to purchase a 1 to 4 family. Single family is just you. Multifamily, 2 units, 3 units, and 4 units. If you're buying between a 2 and 4 unit, you have to live in one of the units. If you're not utilizing a down payment assistance program, you have to live in one of the units for at least 12 months, a full year. You can live in one property and rent out the other 1 to 3 units and be able to qualify for an FHA mortgage. Now, when you talk to a lender or your lender, it is not an investor loan. It is a primary residence loan, which FHA allows for you to purchase a 1 to 4 family. So when you're asking about FHA financing, don't say, hey, I want to do the 1 to 4 family investor loan that FHA offers, because that's not what it is. It's specifically for someone to live in one of the units and rent out the other ones. Also, with FHA financing, so if there was a prior appraisal on a property, that appraisal sticks with the property for 180 days, right? So if someone put an offer on 123 Main Street, which is my favorite address, and they go under contract, they get an appraisal done, the house appraises for $300,000, and something happens and the buyer no longer is interested or has the ability to purchase that home, then that appraisal sticks with that property for the additional 180 days. However many days is left in the 180 days that's available. A misconception, and I've had this question multiple times in the last couple of weeks, because there is an appraisal with the property, we as lenders do not know until we get the appraisal back from the previous lender what the house is qualified for. In some cases, the listing agent knows what the property appraised for, and they're willing to share it, typically after negotiations have happened. But if they're seasoned, they know that they can't go above that $295,000 that the house appraised for, because if the borrower is getting FHA financing, they're going to have to utilize that FHA appraisal that was done on the property. Another huge misconception is FHA is strictly for people with bad credit, or FHA borrowers are not as good of borrowers as someone using a conventional loan. While conventional loans typically have more stringent guidelines, in the last couple of months, conventional loans have dropped their requirement on credit scores, which now allows for people with lower credit scores to qualify for a conventional mortgage. So the benefit of FHA is it allows for people who have credit dings. If you've had a late payment in the last 30 days, or you've had a collection in the last 12 months, as long as we can rectify and fit it within those guidelines of FHA, we can get you approved. This is key. On any loan, FHA, VA, USDA, conventional financing, the underwriter does not want to see disputes or open disputes on accounts that you have on your credit. So if you have done credit repair, even though it's not off or you're no longer doing credit repair, contact the 3 credit agencies and have those disputes removed immediately. The reason why the underwriter wants to have those disputes removed immediately is because the Dispute verbiage on your credit report no longer has a negative effect on your credit. And when it no longer has a negative effect on your credit, then it inflates your score. So the underwriters are going to want to know, hey, what is this person's true score? Because they have disputes on there. So there's guidelines around that utilizing FHA. Also with FHA financing, you do not have to count in any medical bills or collections that you have. It does not have an adverse effect on your ability to get approved. If you have medical collections, and I can speak for me, as the lender, I'm going to look and see if we can get those for a pay for deletion. And if we can, we will do it to help increase your credit score. If it does not increase your credit score, we do not bother with it. However, FHA has a rule that if you have a collection or a group of collections collectively that is over $2,000, we have to do one of three things. You pay it off, we use 5% of the balance, or you get a payment arrangement. When you get a payment arrangement, you need to have a payment arrangement with 3 on-time payments, and they cannot be, I paid it May the 18th, 19th, and 20th. So it has to be 3 on-time payments within a 60-day window. So it can't be shorter than a 60-day window of making those payments. It has to be 3 on-time payments. Example, if you do May 31st, and then you pay one June 1st, and then you pay one July 1st, that's a 60-day window. So just make sure that, when you consult with your lender, that you are in that position. That's something that you can do to help yourself get approved for FHA financing. FHA financing, will allow for you to purchase a home more than one time. A lot of people think it's for first-time home buyers. They think you can only purchase one home or utilize FHA financing one time, and that is not the case. Now, there are rules pertaining to FHA having multiple FHA loans. You typically can't have an FHA loan, more than one FHA loan within a 100-mile radius. And if you do, you have to show circumstances as to why you need a second FHA loan within 100 miles. I closed on a loan where the couple needed to purchase another home. They only qualify for FHA financing. However, we were able to prove that, hey, this family was a family of 4 when they purchased this home. Now they're a family of 6. They've had 2 more kids. And then the older siblings are now old enough to where they need their own room. And that was justifiable. So more space going in the opposite direction. If you got an FHA loan, but you want to keep your home, and the kids are going to your empty nesters, and you want to scale down but keep that home, you can also do that as well. FHA financing has a lot of benefits to it. And one of the biggest benefits to an FHA loan is the fact that it typically has a lower interest rate than conventional financing. I had a conversation with a guy yesterday, and he said, well, I've always heard it in opposite. Before 2008, conventional financing was typically a lower interest rate than FHA financing. However, now FHA financing typically has a lower interest rate because conventional financing is governed by Fannie Mae or Freddie Mac. So, those are a lot of things about FHA financing that people get confused about. Do me a favor, tell me if any of the information that I just mentioned a shocker to you or you did not know about FHA financing. Hopefully this video has been helpful to you. If you have any questions or comments concerning FHA financing or would like to see how you can get approved for an FHA loan, my contact information will be below. And also do me a huge favor. If you stayed to the end of this video, that means you probably liked it or got something from it. Do me a huge favor and give me a thumbs up so this gets pushed out to the YouTube algorithm. Thank you for your time. I'm Kevin Jefferson, the People's Lender. Have a great day.